Hello there traders, welcome back to another video. In this video I'm going to show you the best candlestick manipulation pattern or whatsoever. But before we begin guys, you will understand how to make this kind of trades. Like as you can see, this is the weekly time frame. All of them, this is the weekly time frame. I've been holding these trades because the market is always fractal. And also if you want to receive this kind of trades, also follow us on Telegram. This is free. Discord is free, and also like the video, comment, and then also subscribe to the channel. So let's begin with this video. Before we begin, also pause the video and read the disclaimer. This is the chapters that we are going to cover in this video. We are going to start from the introduction, where I will introduce you to this kind of candlestick pattern. We will also touch on the structure, the time frames, the candlestick pattern, and also the examples. So if you are interested, you can watch the video till the end so that you can understand this candlestick pattern, because this is going to be an amazing video. So let's begin with the first thing, which is the reason to use this candlestick pattern. It will help you to understand the true manipulation levels. And also, this candlestick pattern has a high level of reward. You are going to make some insane entries, guys. The stop loss is always very small in most cases when using it with smart money concept patterns. And also, most of the time, this pattern will give you some huge impulsive moves, meaning more profit quickly. The take profit is very far most of the time. That means you will enter your trade here and then your take profit will be around here. But most of the time your take profit will be hit very quickly. If you use this properly, you have a small chance of being stopped out. It's not very easily to be stopped out unless you are doing something wrong right there. But if you use it correctly and if you understand this video perfectly, you will understand that this is very easy. Most of the time you will see that this is the normal market structure pattern. You can see that this is just a basic. It's like zigzag going up. But in reality, the market will move like this. This one here, it will never happen. I promise you that. There's no such thing. This is just the basic, just to demonstrate to you how the market might move. But in most cases, the market will never move like this. There's no way that you see the market trending like this. If it trades like this, that means everyone will get into the market here using full margin because they already know that price is likely to break this high. Yes, I'll use my life savings to enter here if the market was moving like this. But in most cases, the market will move something like this. It will break this low, eventually make a false move to the downside, break this high. After breaking this high, most people will go bullish, and then suddenly the market will shoot to the downside, breaking this low. Someone will say the market is bearish right now, but then the market moved to the upside, breaking this previous high, making a false move again, and then all of a sudden the market start to consolidate here, but breaking the highs and lows. You can see it's very difficult to trade in this kind of situation. Even if you try to enter the market, let's say here, the market will move high, but then it will move lower. Then you'll have some fear, and then you close the trade, then the market shoot to the upside again. You enter a buy, and then the market stop you out. After being stopped by this move here, you'll try to enter the market again for a sell, maybe here, then the market stop you out again, but then it moved to the anticipated direction. So this video is going to help you to understand where to buy around here, and sell here, and even sell around here, because you will trade after these silly moves here. You'll always buy from here, buy from here. This will help you to understand and trade within these ranges, okay, after the moves has done being manipulated or whatsoever here. So you just have to understand it and take a huge level of practice. If you don't practice, then this video is not for you. But you have to practice a lot, because guys, even if you see this video but you don't backtest, so then that means you are just watching a movie, just binge watching this. You have to practice, guys. Practice. If you don't practice, then there's nothing that is going to help you after watching this video. So let's begin with the almost clear structure. This is the almost clear structure. The market will shoot to the upside, move lower, make a new high, make a new low, break again, but then the market will make this move to the downside. This is where we will be looking to enter the market, or even here if price section allows us to enter the market. But if not, then that means we have to avoid the trade. The same thing applies here. It breaks to the downside, shoot to the upside. This is where we will be looking to enter short. if I may say, maybe let's say we have a demand zone here, here we have a supply zone. This is where we will be looking to sell, to buy here, because the market can be very silly. It can do like a lot of things, like it can shoot to the downside, move to the upside, shoot like this, break this, again break this. You can see this is very difficult to trade, and then suddenly the market shoot to the upside. What are you going to do from here? It's very difficult to trade this kind of things, but this video will at least give you some edge over other traders. So let's start with the time frames right now. We have the monthly. This is the higher time frames, guys. Higher time frame for a swing trader. This is for day trader, for scalpers. For the monthly time frame, you are going to use the weekly to make an entry, or the daily, or the 12 hours. We have the weekly time frame. You are going to use the 4 hours, or maybe the 3 hours. Also for the day traders, we are going to use the daily, the 1 hour, 45 minutes, and the 30 minutes. 12 hours time frame is 1 hour, 45 and 30 minutes, or even the 50 minutes, but it's not likely. And then we have 4 hours time frame. We are going to use the 50 minutes, 5 minutes, sometimes even the 1 minute, but it's not likely. That is why I didn't write it down here. And then we have the 1 hour time frame. We are going to use the 5 minutes, 3 minutes, or the 1 minute. Okay, that's how you should trade this candlestick pattern. So right now, let's focus on the candlestick pattern. It's very basic, guys. You have to understand it very clearly. We have a bearish candle red here. Okay, let me say this is the first candlestick here, and then we have the second one here, and then we have the third candlestick, which are all bullish. But then you see this candlestick here, the fourth candlestick. If it manipulates this low here, this is your trading day to move to the upside. Just put it like this: red, blue, blue, manipulation, RBB, manipulation. And this manipulation has to be blue. Okay, let me write it down clearly, maybe you will understand it. Red, we have red, blue, blue, and then we have blue but manipulation. Okay, this is how maybe you will understand it, because this move here manipulated this low. Then this is your trading day to the upside. That's how you should understand it very clearly. And then we have the bearish setup view. We have these two candlesticks, but we can start from here, 1, 2. You can see this one here did not manipulate this here, and then we have the third one, and then we have the fourth one. On this fourth one, we can see the price manipulated this high and this high here. This is your trading day to go down. Okay, you have to understand it that way. I hope you are clear before we move forward, because if it's challenging, guys, we have to do it again. But let me repeat one more time. 1, 2, 3, manipulation. What I mean is that we have to have 3 candlesticks of the same color. We have 3. It will make this setup to be valid. And then we have to also have a different candlestick, which is the first one most of the time. Same here, we have 1 different color with a different color, and then we have 3 candlesticks of the same color, and then the last of these 3 candlesticks has to manipulate the previous high. On here it has to manipulate the previous candlestick's low. Here is high. I hope you understand, guys, because I don't want to move forward without you understanding it. So on this here, this is where you'll be looking to enter the market. And also you can use your Fibonacci extension like this, a Fibonacci retracement, Fib retracement. Here on the 50% here, 50%, this is your 0, this is your 1. Even here, you are going to use 50%, 0, 1, 50%, because we are retracing from starting here and then it ends here. Even here, we start here, we end here, 50% here. This is where you'll be looking to go short. So that means your analysis will look something like this, and then you to go long like this. This is your analysis. So every time when you see a setup like this, just make sure that you are looking to enter the market here and then move to the upside. Here, go down. That's how you should understand this setup, guys. It's not that difficult to understand it, but if we move forward, you will understand it very clearly. So there will be a lot of candlesticks that you are going to find when you are doing some backtesting. So that is the candlestick that I want to touch here. So let me show you. We have right now, pay attention, guys. We have red and blue. Okay, and then we have a red again. You can see there's some sort of a pattern here, but to be honest, let's start here. Blue, red, manipulation of blue, and then to the upside. We have 1, 2, 3, manipulation. They have to be different colors here, these two, but then this one has to be the same as this one when we are in a bullish trend. You have to understand it, guys, very clearly. Let me show you. And then we can see that because this is an engulfing candlestick, most of the time price is likely to retrace here. So that means you enter your trade here and then move to the upside. And imagine if this was a daily time frame and then you're using the 1 hour. So that means you're going to catch a lot of pips by just doing this simple thing, by just understanding the 2 previous candlesticks. And it doesn't end there. As you can see, this setup here is this one here, but it happened again even before. We can see here we have 2 different candlesticks with different color. We have red and then we have blue. Then we have a manipulation of blue. This 2 has to be different colors. This 2 has to be different colors. I have put them together because I wanted to show you. Sometimes it can be blue, red. Sometimes it can be red, blue. You have to understand it that way. Red, blue manipulation. Blue, red manipulation. And manipulation has to break this. As you can see, it broke this. And then on the next candlesticks, you can see retracements here. You can still wait here. I have covered this trading style here, how to enter the market like this. And then the market shoot to the upside. Let me show you another one. We have red, blue manipulation and being bullish. Red, blue manipulation of blue. And then look, price shoot to the upside. Price shoot to the upside. Okay. We have blue, red manipulation. But this one here, I don't really like it because it's like this. This one here is like this. But at the end of the day, it works. And yes, sometimes it can. This one here, I don't like it because it didn't manipulate this low, this candlestick here. Even though we have red and blue, okay? You have to understand it that way. And then another thing here, we have 1, 2, 3, 4. Then this candlestick break this and then it retraces. Then the market shoot to the upside. That's how you should always find the setups. And also guys, the same thing here. Here we have blue and red manipulation of blue. Here we have blue, red manipulation of blue. But it's like this. As you can see, it's like this. We have blue, we have blue. We have red, we have red. The bullish candlestick broke these 2 lows here. And then it closed bullish. Then the market shoot to the upside. You have to understand it that way, guys. I hope I'm clear with everything. If you don't understand, the comment section is your friend. Also, you can come to Telegram and ask me some questions. I'll always be willing to answer. So let's focus on the video's candlestick pattern. We have this. This is the 1 hour time frame, the Fibonacci extension. We have 1, 2, and 3 by this one. Never mind, let me start again. 1, 2, 3. And then we have this candlestick. It broke this candlestick's low and closed bullish. So that means in the lower time frame, we will be looking to enter the market here. And then our take profit can be this high. And we can also see that the market also broke this low here and then shoot to the downside. And we can also see that, okay, price is like this. And then we're still here. So that means right now we'll be looking to enter long here to target this high now. Because the market already manipulated this low and have to manipulate this. Yeah. So that's how everything should be aligned, guys. So anyways, let's move on to the lower time frame so that we can understand how we can trade this. Okay, let me see. But before we begin, I don't think there's anything else here that I wanted to demonstrate because everything aligns better. Even here, guys, look, we have 1, 2, 3. On the next candlestick, it got manipulated. Look at this. It just shoot to the upside. Maybe let's say you were targeting this high here. If you are scalping here, okay, that's how you should understand it clearly. This one, I don't really like it. We have bearish, bullish, and then it manipulates, and then price just shoot to the downside. Okay, let's move on to the lower time frame. Okay, here on the lower time frame, there's nothing. We just see the market trend to push to the downside on the 5 minutes time frame, and then there's nothing here that we wanted to enter. We have a rejection candlestick here, but in the lower time frame, I like to see a demand zone or a supply zone. But in this case, we'll be looking for a demand zone. Okay, here is not even that clear. I don't like it. So that means we'll be waiting for this to shoot to the upside and then wait for a confirmation candlestick. Okay, price rejected here, but then we still need a demand zone and a confirmation. Let's move on. Okay, right now we have this candlestick here, so that means we'll be waiting for the market to make a candlestick like this here, and price should not close or trade below this low here. I hope you understand me on that one. This will be our zone here, and then this will be our confirmation candlestick, and then we'll be looking for the market to shoot to the upside. Let's look. Okay, we have this candlestick here, and also we can see that we have 1, 2, and then price rejected. And also on top of that, we are on the demand zone. This is your demand zone. If you don't know how to draw them, check the videos in the description below. They will teach you how to draw the supply and demand zones. And also guys, that means right now we will enter the market here, put our stop loss below, and then we will target this previous higher time frame high like this. Okay, this is how we are going to make this entry. So right now let's see how the market behaved. Very easily we hit take profit without even hesitating. But then I wanted to show you something. If you move back a little bit, here you can see after this rejection candlestick, we can still put our buy limit order here and still put our stop loss here and then target this. Let's clear and look at how the market behaved on the next candlestick here. Look, it has retraced back from this. So that means your entry will be sniper. But you have to practice a lot to understand this very properly. If you understand this properly, guys, there won't be consistent losing days. And guys, before I move forward, this is the same thing again. 1, 2 on the third candle, price shoot to the downside. We have another one here. We have this one, manipulation, price shoot to the upside. We have another one somewhere here. Yes, we have 1, 2, break, shoot to the downside. We have another one somewhere. Do we? I don't think we do. But if we do, you can just tell us in the description below. So let's move forward. And then we have another one like this, guys. This is your previous support, and then we have resistance here. When I mean support, I mean this candlestick here. It's like this, and then we have our support changes to resistance, and then we have this 1, 2, 3. It manipulates. So that means in the lower time frame, we'll be looking to enter the market here and then shoot to the downside. Let's look at the lower time frame. In the lower time frame, you can clearly see that we have a rejection candle, but it's very huge to trade this. So that means I'll be looking to enter the market here, slightly here. But then look, the market just shoot to the downside without hesitation, and then it started to move to the upside. So that means your trade ended here before we can see this move, because we have to trade the next candlestick. So right now we have an example where there is no entry. You can see we have 1, 2, 3 manipulation, but then if you see there's a huge fair value gap here. So that means even though you try to enter the market, there won't be any entry because we will be looking to enter the market on a retracement. But look, this is the same structure that I have showed you in the beginning of the video. We have this move, have this move, have this move, and then we have a break. This is where we'll be looking to enter the market sometimes, because the market manipulated is just shoot to the upside, a little bit of retracement, and then it moved. There is no way that you want to trade in between here, even though there's a lot of entries here. Unless if you have missed this one, you can try to enter here, but it's a little bit risky to enter in this kind of price action, even though there's a lot of things here to trade. Okay, that's how you should understand this behavior in the market. So guys, if you have enjoyed this video, if I gave you a lot of information, please like the video and subscribe to the channel. And also guys, come to our Telegram or Discord so that you can get a lot of free information. If you want this PDF, guys, you'll find the link in the description below. So guys, I guess I'll see you on the next one. Don't forget to subscribe, guys. Please see you on Telegram if you want me. Bye bye.